Overnight markets here, December corn down 2 3/4 at 429 3/4. January soybeans were down 11 3/4 at 1062.5. And December Chicago wheat was down 3.5 at 611 3/4. This morning's export sales report, solid for corn, 1,684,100. Estimates were looking, top end of the estimates were looking for 1 million. So a real good week for corn. Soybeans came back at 1,443,500, closer to the top end of the estimates there as well. 1.6 million was the top end. Wheat, 443,700, in line with the estimates, along with meal at 228,600. We are through 2 days of 23 for the harvest price discovery for crop insurance. Corn's currently sitting 430 3/4, and soybeans at 1056. Good morning, guys. Hope everybody's good. We, I guess looking at weather in Brazil this morning, little pop-up stuff happening in the north. Their overall, say 10 to 16 day still appears to favor some water coming through, which would be a welcome reprieve. But you got a real fast harvest going on here in the United States. About a 12 to 14 day open window here. So all those things factoring in. Dustin, maybe a few thoughts on your mind here this morning, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, the U.S. balance sheet for Brazil is quite abundant. We are finishing off very dry. We had a dry August, dry September, and we are hearing, just kind of the advocate with what Kevin said yesterday, hearing really good corn yields and then hearing decent bean yields for sure, but not the, at least in Illinois, not the bean yields we saw in 2018 after coming out of so many years of corn on corn rotation. And this is just anecdotal, but looking at that balance sheet, I mean, we definitely can afford to drop down to like a 52 national yield and still have plenty of abundance in the end. If that's corresponding with, kind of normalized rain coming in for Mato Grosso. And, I think Brazil in the next 2 weeks is expected to get weighted average 2.1 inches across its growing regions for beans, which is about normal. And if things start to kind of normalize down there, I think that there could be some additional risk premium that comes out of the market just because we have enough acres in the U.S. and enough balance sheet. I could be mistaken. I want to keep kind of an open mind of what can happen here. But like if you've had this big push in prices, 10% rally off the lows for both corn and beans, and you're getting decent yields yourself, I think it's still worthy of considering hedging into it.
That's a good point. Justin, anything to add there?
Yeah, no, I agree. I mean, if you look at just a seasonal bear market, however you want to look at it, I mean, both corn and beans did kind of what you would expect. Kind of made a first notice day type bottom. They rallied back to the moving averages, 10% or more rally. And harvest is really ramping up. So it's hard to bet on in my opinion, South America not returning to a rainy season. I know it's been extremely dry, but it's a rainforest. It typically is going to rain. So it's just a hard bet to make. Obviously rains can fail. We can turn into a drought and it's a different story. But to Dustin's point, indications are that we're going to have really big crops either way. You could fine tune it a bushel or two here and there. But it's probably a rally that needs to be rewarded, with the funds covering, I think, probably most of their short positions, looking at changes in open interest and some of these other things. We'll see what that report says on Friday, but, I think you're going to hit a lot of hard hedge pressure, in the next 10 days with this forecast. And in the short run, I think it's going to be too much for the market to stand without a big fund short that's willing to buy breaks. So we did get good demand today. So we are getting some export demand, which is positive. But again, I think the headwinds might be much to take us much higher than here unless something changes, in my opinion.
Oh, very good. Ben, what's on your mind this morning?
I think those are all tremendous points of where we're headed. We haven't seen anything except for weak basis, certainly logistic issues, but we have October where we're losing not just the short who's there to buy dips, but we're losing daily, we're losing protection on whether it was ARC, PLC, and also crop insurance. So should we get to the last half of harvest and we get plugged, hedge pressure comes in, there may not be the same sort of underlying support, whether it be from a fund short or from a grower who's reluctant to sell because they're leaning against crop insurance levels. So I'm too early for me to get excited for the next move of this market. Next move higher.
Right.
I will say just the weather models aren't in complete agreement for South America for the 2 weeks, right? So the European, to Dustin's point, showing anywhere from 1.5 to 4 inches, but the GFS is much drier, right? And still showing rain, but just a lot less totals. So for a 2 week forecast, so we could trade this for a week or so, right? Kind of these models flipping around. It's just something to keep an eye on. It is kind of out there a little ways, and you know how weather models go. They can, especially if you're trying to trade them to your narrative, right? They can kind of screw you here and there until we know what actually happens. So,
yeah, I think the key to that too is if you're one of those producers and you're kind of leaning on crop insurance, realizing that it's expiring every day, at a minimum, have some orders in. If the funds decide they want to go buy 100,000 more corn, for example, can't rule that out. Definitely put orders in where it makes sense for you, and have a drop dead date of call it middle of October, where you have to have something more aggressive in place to replace your crop insurance or something like that. At least a game plan for the next 15 days.
Right, and kind of seasonal suggests that maybe we stay strong for another month. Right, and which would coincide right into the expiration of crop insurance, which we talk about a lot. So to your point, Justin, right, like maybe this run isn't quite done yet, but if you have a great crop and you're looking to increase your hedges, this is the time to do it, right, between now and the next couple weeks. So
yeah, I mean, yeah, to that point, I mean, you're looking at 450-ish type corn out to March or, even beyond. And it's like, we can remember when it was 380 6 or 7 weeks ago, right? So just the amount of money that we've brought back into this market with, almost record yields for some folks is pretty significant.
Yeah, it's great seeing great sales too today, right?
Yeah.
So if that continues, and to Justin's point, funds keep, getting out of their short positions, or maybe try to chase the trend a little bit and get long. Yeah, maybe you get another leg up, but I think that's a huge opportunity, especially with a really good crop to be selling. So,
no, very good. Ryland, we'll transition over to livestock here. A strong day yesterday for fats and feeders, and you've got hogs now fully retraced that $14 break from summer, so pretty significant there as well. What are your thoughts this morning?
Yeah, it was a kind of an explosion yesterday in both places, really. Obviously, we're seeing managed money just kind of continue to dogpile into these markets. I mean, for whatever reason. I mean, you can pretty much pick any headline. It's all been pretty friendly at this point, and just some of the implications of the port strike, lower interest rates, Chinese stimulus. It's all kind of been pointing this direction for a while. We are starting to see the market catch up to that a little bit. We saw a little bit of early cash trade yesterday at 186 in Texas, and just the fact that it was a little bit earlier in the week, I think really kind of got guys worked up. Saw a little bit of 187 in Iowa. Obviously, these are pretty small numbers, so there's a lot more to go. So we'll see where this averages out. But I think that for an early indication, market really hasn't stopped or shown any signs of letting up. We saw a big jump in feeder open interest. It looks like managed money's kind of built their long position and still adding. It was a big up in January commitment. So we're starting to see them buy further and further back and start to get some of the length into next year. So I would expect maybe we could start seeing some of those premiums kind of come back in the back end of the market that we lost, unless we get some kind of surprise on the January inventory report. But overall, I mean, the news has been really positive. Exports at 17,700 metric tons. This is pretty much the highest one we've seen since May. So it seems like we've really seen, quite a bit of demand here from the outside markets. as well. So, I mean, it was a big up. It's obviously a really good opportunity to start to look to kind of build a floor in the market in either place. Cash on the cattle side is definitely kind of leaning more towards the upside, whereas on the hog side, it just seems like carcass and cash have been relatively flat. We saw a little bit of a down yesterday, and it just seemed like everybody was coming after the future. So see if maybe this momentum can hold. It really some pretty strong export data as well on the pork side of things. So we'll be watching that. It just seems like now we're at this point where it's kind of show me, some fundamentals at this point that are a little bit more supportive than what we've been seeing.
Very good. Appreciate the update. A couple things to look for. We're going to be on tomorrow morning as usual at 8:15. It's Fun Fact Friday tomorrow, so be sure to tune in. You never know what you're going to get with Fun Fact Friday. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield, let you know when all the shows are coming on and any content that we put out. So like I said, on a daily basis, we appreciate everybody that tunes in. We have a lot of fun with the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Look forward to talking to everybody tomorrow. Have a great day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.